as you re-watching your retirement savings grow, or for some of you as you re-trying to make sense of why your nest egg isn't as full as you thought it would be by this stage in life. There's some question that keeps popping up in many of our minds. What's going on with me 400 onic? Well, if you've been wondering how a global pandemic and unprecedented market volatility can impact your long-term investments, the answer lies in the Trump effect. Yes, you heard that right, the Trump effect. Now, before we dive into the specifics, let me ask you, did you know that since Donald Trump took office in January 2017, the S&P 500 has experienced one of its most turbulent periods in history? I'm talking about a 15 decline in just 2 months, followed by a 40 gain over the next year and a half. That's like going from a roller coaster ride to a Ferris wheel in the blink of an eye. According to a study by the investment firm Fidelity Investments, approximately $1 trillion was wiped out from retirement accounts alone between January 2017 and December 2018. A prior I said that Yes, you read that right, $1 trillion. And that's just scratching the surface of the impact Trump's presidency has had on your retirement savings. As the stock market continues to experience unprecedented volatility, many Americans are left wondering what is happening to their retirement savings. The truth is, the Trump effect on your 400 onic has been a wild ride since Donald Trump took office in January 2017. So, you're for took been hundred do all why all you do you can tell Sam tell when to know I that For some, it's been a roller coaster of ups and downs, while others have seen their nest eggs grow at an alarming rate. According to a report by Fidelity Investments, 60 off workers aged 25-40 have seen their retirement accounts grow since Trump took office. However, this growth has not been uniform across the board. In fact, a hopping 30 off Gen Xers and millennials have seen their accounts decrease in value during that same time period. The reason for these disparities lies in the unpredictable nature of the market under Trump's presidency. From the initial market surge following his election to the subsequent correction in February 2018, investors have been left scratching their heads trying to make sense of it all. And let's not forget about the impact of the COVID-19 pandemic, which sent shockwaves through global markets and forced many to reassess their retirement strategies. As you watching your retirement savings grow, or for some of you, as you trying to make sense of why your nest egg isn't as full as you thought it would be by this stage in life, there's one question that keeps popping up in many of our minds. What's going on with me 400 oink? As the Trump administration took office in 2017, many investors were left wondering what the impact would be on their retirement accounts. Would his pro-business policies lead to a surge in stock prices and a corresponding boost to your nest egg? Or would his unpredictable nature create market volatility that would leave you questioning your investment decisions? One key development that caught everyone's attention was the tax cuts passed by Congress in 2017, known as the Tax Cuts and Jobs Act. This legislation significantly reduced corporate tax rates from 35 to 21, a move aimed at encouraging businesses to invest more and create jobs. On paper, this sounded like a win-win for investors, as corporations would have more disposable income to reinvest or distribute to shareholders. The numbers seemed to support this thesis. In the first year of the Trump administration, the U.S. 500 index jumped by over 22. Many individual stocks also saw significant gains, with some tech giants and financial institutions rising by 50 or more. It was as if the entire market was embracing the pro-business sentiment emanating from Washington. But beneath the surface, there were warning signs that investors should be aware of. Despite the market's strong performance, many experts pointed out that the underlying fundamentals of the economy weren't necessarily improving. In fact, some argued that the tax cuts had merely shifted wealth from one group to another, rather than stimulating meaningful economic growth. As the Trump effect continues to shape the investment landscape, it's essential to drill down into the specifics and assess what these changes mean for your retirement savings. One of the most significant implications is the impact on interest rates. Theft, led by Chairman Jerome Powell, has been busy keeping rates low in an effort to stimulate economic growth. This may seem like a good thing at first glance, but the reality is that it's created a challenging environment for fixed income investments. Take, for example, a 60-year-old investor with a moderate risk portfolio. Historically, they might have expected their bond holdings to generate around 4-5 returns per year. However, in today's slow-rate environment, those same bonds are yielding closer to 2-3. That may not seem like a huge difference, but it can add up over time. In fact, according to a recent study by Fidelity Investments, the average 400 ONEC account has seen its value decrease by around 10 since Trump took office. It's not all bad news, of course. The tax cuts and deregulation efforts have sparked economic growth, which can be a boon for stocks. However, This increased optimism has also driven up valuations, making it more challenging to find undervalued opportunities. As investors, we need to carefully consider these factors and adjust our strategies accordingly. It's no longer just about maximizing returns. We must also prioritize managing risk in today's volatile market. As we delve deeper into the world of retirement savings, it's clear that the Trump effect has had a profound impact on many Americans' nest eggs. For those who've been riding the roller coaster of market volatility, the question on everyone's mind is, what does this mean for me future? The numbers are staggering. According to Fidelity Investments, in 2018 alone, investors saw an average return of 9.3 on their 400 ONIC accounts, a significant bump from previous years. But scratch beneath the surface, and you will find that not everyone has reaped the same benefits. For instance, a report by the Economic Policy Institute revealed that between 2016 and 2018, the top 10 of earners saw their 400 ONIC balances increase by an average of $64,000, while the bottom half saw theirs grow by just $1,400. The chasm is stark, and it's not hard to see why many are wondering if they are playing catch up or even falling behind. And then there's the matter of fees, a crucial aspect of any investment strategy. According to the Pew Research Center, in 2018, the average 400 ONIC plan had fees ranging from 0.5 to 2.3. While these numbers may seem small, they can add up over time, eating away at your hard-earned returns. As we continue to navigate this turbulent landscape, it's clear that rethinking our retirement strategy more crucial than ever. But where do we start? As we've seen, the Trump effect on your 400 ONIC has been nothing short of unpredictable. From the initial surge in market volatility to the subsequent recovery and growth, it's been a wild ride for investors. And yet, despite the ups and downs, many of are left wondering what's next. Will the trends we've seen over the past few years continue, or will they shift in response to changing economic conditions? One thing is clear: the days of assuming your 400 ONIC will magically grow without any effort on your part are behind us. The reality is that investing in today's market requires a strategic approach, one that takes into account not just the whims of the market but also your own financial goals and risk tolerance. So what can